Well, paychecks for fast food workers in California are getting a little bit bigger. Starting next year, the minimum wage will be lifted to $20 an hour. So what does this mean for restaurant chains in the state? Yahoo Finance's Brooke DiPalma joins me now with more. It's always a double-edged sword. It's good news for workers, but then you have a lot of restaurants wondering how we're going to meet these costs.
Rochelle, a double-edged sword indeed. Great for the workers, but hard for the companies to figure out. And the reason behind this minimum wage increase is because of the FAST Act going to effect. Now, that stands for Fast Food Accountability and Standards Recovery Act. It does go into effect on April 1st, 2024. And as you noted, it will bring the minimum wage for restaurant workers up to $20 per an hour. Now, it is important to note here that it is for companies that have at least 60 locations nationwide. And one of those chains that is going to be impacted in a big way is fast casual chain Chipotle. They have roughly 400 locations in the state of California. That's roughly 15% of its portfolio. And CFO Jack Hartung did note that this state is where they have more restaurants than any other state, making the FAST Act something that they're going to have to tackle directly. Earlier today, CFO Jack Hartung weighed in on how the company is preparing for it.
We tend to pay higher wages than others. Our average wage in California is about $17. To get up to 20 as the minimum. Keep in mind, when the average is 17, you've got some below, some above that. To get the minimum to 20, we're going to have to raise wages across the board by somewhere between 17, 18% up to 20%. Significant increase. Our plan is we have no choice. Every restaurant company in California is going to have to do this. We're going to have to raise prices. We've said that. We've not made a decision. We'll wait till we get closer to the April timeframe. But we'll have to raise prices somewhere in that mid to high single-digit range.
And he went on to say that despite this, the company will continue to build locations in the state of California, saying that the company does really, really well in the state of California. He also added that he believes that Chipotle pricing will still be about 10 to 30% below other restaurant chains in the state.
So then, Brooke, speaking of the others, what are some of the other restaurants with exposure in California?
Yeah, Rochelle, well, so many that come top of mind is Wendy's, McDonald's, Starbucks, Yum brands like Taco Bell, Pizza Hut, KFC, as well as others like Burger King and Domino's Pizza. But one caveat that's important to note here is while Chipotle has a company-owned presence in California, so many of these companies that you see on the screen are franchise owned. And so ultimately, come April 1st, those franchise operators are going to have to tackle this issue about how exactly they're going to increase their wages and meet that new demand from California legislators. But it's also important to note that this FAST Act was opposed by many executives. Last August, McDonald's U.S. president called the legislation ill-considered and lopsided. He added that it would hurt everyone. And so it'll be really interesting to see how this all plays out and how franchise and companies at large look to tackle this new higher minimum wage in California.
Indeed, it'll be interesting to see how that affects the bottom line when we get the next set of earnings after that goes into effect. Brooke DiPalma, thank you so much.